Okay, guys, today I want to talk about one of the most important aspects of Elliott Wave analysis and Elliott Wave strategy. If you are an Elliott Wave practitioner or if you've been practicing Elliott Wave strategy, then this is the best video that you will ever watch in YouTube that I'm going to give you for free, for free. The most important aspect of this video is I'm going to open your eyes. I'm going to open your eyes to see why it is very, very important to trade Elliott Wave with the trend. The most important, the first most important aspect of Elliott Wave trading is you have to determine the trend of the market. First of all, the trend of the market. Then uh, you look at the waves that will lead you to the point that you need uh, regarding that trend, or rather in terms of with the respect to the trend. So if you consider this currency pair, that is Euro Japanese, because I'm going to be what we are looking at right now is we are going to be trading complex corrections and the waves that will lead to these complex corrections. At the same time, we are going to be looking at this is the live market. If you are watching this when I'll be posting it, then you are at a big advantage, because you are going to see what we are expecting in the future, or rather in the recent future. So if you consider this currency, that is Euro Japanese yen, this is what we are looking at. And the first most important part that I need to introduce you to in this currency, that is Euro Japanese yen, is this is a weekly time frame. So what are we looking at in a weekly time frame? Why are we even looking at a weekly time frame when we need to trade daily or 4 hours time frames? So the most important thing, the most important reason as to why we are looking at a weekly time frame is to see the general trend of this market, the general trend of this market. Uh, from way back, that is in 2002, we've been seeing this market has been in a good uptrend. This market has been in a good uptrend up to until when we saw this market shift to downtrend. And why did we consider this as a good shift of uptrend to downtrend? Remember, this is a weekly time frame, and if this is a weekly time frame, we saw market clearly take out this most important. This was the first time this market took out this weekly swing low. Market took out this weekly swing low, and since market took out this weekly swing low, that was around 2008. We haven't yet seen market come back to trade uh, at the supply of this weekly time frame. So currently, what we are looking at currently is anything that will be trading. If we'll be looking at a market that will be actually getting back to the main supply, then that will be considering that as a uh, correction, good correction or pattern. And this is exactly what we are seeing after this wedge, because again, we can be considering this as wave one or wave A. Then this what we are having right now is wave B or wave 2, because we are seeing a shift of the trend. Again, this can be a good wave 1 or wave A because of this leading diagonal. This leading diagonal. If you can't really see this clearly, then you need to watch most of my videos in this space on leading diagonals and ending diagonals. So if you look at this keenly, what we are seeing right now, market is making this good ABC pattern, which is a good correctional pattern. So if this is ABC, then what we are expecting is this market to hit, or rather to come back and hit our most important weekly supply zone. So we are looking at a wave that will lead us to this weekly supply zone. So this is in terms of weekly time frame, and I'm not going to consider it in terms of my trading as such, because what we are really looking at in weekly time frame is just the trend. So if we are looking at the trend of the weekly time frame, then what we need to have at the back of our mind is we need to look at waves that will we are still looking at long positions, rather long positions, because we are still seeing a gap around this point. We are still seeing a gap. Again, if you consider this as a weekly time frame, remember this market, what we really expect is this market to hit at the top around this area before we can look at a bearish position, or rather before we can take bearish positions. Or we can be expecting this market to hit our most important level, that is the weekly supply areas, before we can be looking at uh, short positions. So the most important time frame that we really need to consider, or rather I'm going to consider in this video, this episode, is daily time frame. So if you narrow down to daily time frame, this is what we have. Remember, at the same time, when we are looking at a daily time frame, we are still looking at a market that will rather hit our weekly area supply. So this is what we are looking at in terms of weekly time frame. This in terms of daily time frame. I mean, in terms of daily time frame, this is what we are looking at. Again, we cannot still expect that this market be in a short position as at now, because when the last time we saw market trade around this area, this was the swing low, and since market made this swing low, we are still seeing this market breaking structures. We are still seeing this market breaking structures. So this is still what we have in terms of daily time frame. This is in Euro JPY. So if you look at this, just logical reasoning, if market is still making higher highs and higher lows, then what we expect is we are still looking at a long position, that is a bullish trade setups. We are still looking at a bullish trade setups. So again, we are not going to consider, or rather, I'm not going to consider as such a daily time frame, because I really need you to get the aspect of how complex correction is coming about. So if you narrow down again to 4 hour time frame, the most important time frame that I like to trade, if you narrow down to 4 hour time frame, then this is exactly what we have in terms of a 4 hour time frame. So in terms of a 4 hour time frame, we can see that we expect a complex correction. And remember, when I talked of complex correction, this is not the first time I'm talking of a complex correction. When I talk of a complex correction, you know that what I have in wave W, we can have wave ABC in wave W. Wave X can be simple or complex. If it is complex or rather simple, then we expect at least a good correction or path on wave X. It can be complex. Again, I repeat, it can be complex or simple correction. Then we expect a good wave, that is wave ABC in terms of wave Y. So this is what we are really looking at in terms of complex correction, So when you bring this reasoning, or rather the logic, into what we have on our live market, remember, all the way from weekly time frame, we've been looking at uh, uh, long positions. All the way. So if you look at this currency keenly, or this structure, remember, we are expecting this market to take out this point. If market takes out this point, then we are sure that this market will be chasing our weekly supply area. That is at this point. So the reasoning behind this again is, if you look at this pattern, what we are having right now, we are looking at wave W, which comprises of wave A, B, and C, and then wave X, and again we are looking at wave Y. So within wave Y, again, remember within wave Y, we expect at least wave A, B, C within wave Y. So looking at this again keenly, we are seeing that we have wave A, which is a good extension, that is an impulsive wave, that is wave 1 through 5, which we are still looking at. That is, we are still looking at this wave uh, A, which is 1 through 5, that is the impulsive wave structure. So when we are looking at impulsive wave structure, the reason as to why this is also important is the aspect of the rules of impulsive waves, the rules of impulsive waves. So we are trading wave 5 currently, and wave 5, remember wave 5 can be equal to wave 1, or can be 38%, can be 38% equal, can be 38% retracement of wave 1, wave 1 and 3, wave 1 to 3. What I mean is, if you look at this, we have our first point to consider this as a completion of wave 5 is right at this point. That is our first point. So when we are looking at this around 220 pips from the bottom of wave 4, from the bottom of wave 4, or again, what we can be having, or what we can be expecting rather, is wave 5 to be equal to 50, 38%, 50%, or 61%. But we can take out 61%. So when we look at 50%, our 50% is right at this point. So if you have your 50% right at that point, then this is exactly what we have. 50% will be equal to around 280. So this is a good point to consider completion of wave 5. So after completion of wave 5, then what we expect is uh, a correction, which is wave B, before we can continue with wave C. So this is not really a currency that I'm looking at as such, because what we are looking at, we are still looking at a long position before market before market uh, could reverse, before we could be before we can be looking at a good bearish uh, positions. So again, it will be even best, or we can consider this a great analysis, if market will take out this daily swing high at least a little bit before we can be looking at a retracement. Remember, again, a retracement can be complex, so what we'll be expecting around this point is something we don't know. But for now, what you should be looking at now is bullish position. This is in terms of Elliott Wave analysis, and in terms of Euro JPY. So again, the same reasoning. Remember correlations of Euro JPY and GBP JPY. When we are looking at GBP JPY and Euro JPY, where when we are looking at long position on Euro JPY, then at least we should be expecting a long position on GBP JPY. And if we look at GBP JPY, what I'm looking at in GBP JPY in terms of a daily time frame, in terms of a daily time frame on GBP JPY, again, the same reasoning applies, but we still should be expecting uh, some long positions to the extreme, some long positions to the extreme. I don't want to talk much about these currencies, because maybe I will talk about it in another episode, but this is what you expect. We are looking at wave 1, 2, wave 3, which is a good extension of wave, that is wave 3, and then wave 4. Uh, After completion of this wave 1 through 5, the extension, and finally we are looking at wave 5. So this area is a good area to look at wave 5 because again the same reasoning applies to this. If you wave 5 can always be equal to wave 1. Wave 5 can always be equal to wave 1, and if you have your wave 1 around that point, you can still see that we have a good potential for wave 5. And because this is in terms of a daily time frame, what we still have is even greater because when we are looking at it in terms of pip pip aspect, then you can see wave 4 has a total of wave 5 can have a total of 200 2000 2300 pips, that is equal to wave 1. So this is what we are looking at. This is what we are looking at. I don't want to talk much about GBP because I've tried to narrow and synthesize Euro JPY. So if you have any question concerning how to look at wave aspect, then you can just click on the subscription because there's always so many great episodes on this space that I post with the reasoning of Elliott Wave structure. Again, if you enjoy this content, kindly give this video a thumbs up. Don't forget to subscribe, like, and share. Also, you can comment if you have any question, or if you are seeing something different, you can comment down below. I'll gladly answer your question. We can differ, or I can rather correct you where I feel you might not be looking at it on a good side. Again, the most important thing that maybe you do is exact entries and how to control where to have your stop loss. That is the risk aspect, and reward, what to do and how to trade manage your position. You can just DM. We have a VIP space. If you want to join the VIP space, you can just comment. You can just contact me on my Telegram, and I'll gladly add you, or you can talk about it, and I'll gladly add you to my VIP so that you can see, you can be part of that great community. Otherwise, see you in the next episode and have a successful week ahead. Thank you.